Hello, everybody. So this evening, we've had a lot of rather expensive stocks that have reported their earnings. And I have to say, across the board, most of the stocks that reported their earnings did very well. And so I think that bodes pretty well for the IT industry in general and for the economies in general. All of the fears that we had 6 months ago, when I read these earnings report, I don't feel like they were warranted. Companies are still spending heavily on their security and on their data initiatives and other forms of investments into their future. And so these companies are doing very well. And rather than cover any specific company, what I wanted to do for this video today is just put them into my valuation spreadsheet and comment on them based on the valuation spreadsheet. So if you're new to the channel, the way I value my stocks is I ask how much am I paying for each percentage point of revenue growth, of forward revenue growth, how much am I paying? And I obviously want to pay as little as possible. And what we find is that many of the stocks that reported today, whether it's MongoDB or CrowdStrike or Lululemon, they're actually fairly expensive stocks. CrowdStrike reported yesterday, by the way, but I put CrowdStrike in there to compare it to SentinelOne, which reported today. They're actually fairly expensive stocks, aside from SentinelOne, but we'll see there's a reason why SentinelOne is actually cheap. So these stocks, and again, there's a difference between buying a stock when it's undervalued and buying a stock that is going to be a stellar performer in the future. Stocks can remain highly valued for a very long time. In fact, they can be highly valued for the entire lifetime of the company. So we always need to be a little careful about the valuation and not assume that there will be a valuation reset. But nonetheless, these stocks, expensive stocks, but they do very well, and I own many of them. So the first stock that I own that reported earnings today is MongoDB, and MongoDB reported a great quarter from what I saw, and the growth is still there, and the year-over-year growth is also doing well, and this is a company that's actually profitable now, and profitability on MongoDB is increasing pretty fast, which makes Wall Street very happy, which means that this stock is likely going to get more and more expensive, although it's a stock that I'm looking to own for the long run. As a reminder, MongoDB is in the big data space. It belongs in this category of stocks that, say, a Palantir or a Snowflake belong to. And they have a different approach to databases. What MongoDB does, actually, it's interesting to know that MongoDB, the name of that company, stands for humongous database. So a very large database. That's why they named it MongoDB, because this is a company that has its online database system called Atlas, which allows for NoSQL storage. And so SQL is a rows and column type of storage, and MongoDB famously does not use that. They use JSON files, which means that when you store your data in the form of document, in the document form, as a developer, it's very helpful because you don't need to be a database expert. You can just be an expert at coding your app, and you don't need to learn how to deal with database like you would have with MySQL, which is why this is actually a very popular database among developers that are trying to create apps that can scale, and MongoDB's Atlas can scale with your applications that you create. And as a result of that, MongoDB has a strong developer community of coders who don't want to use SQL database. And if you compare MongoDB to, say, Snowflake, Snowflake is a columnar database. So Snowflake uses SQL and that database technique, which MongoDB doesn't use. MongoDB is a document database, makes it extremely popular, and I love their niche. I love the niche play of MongoDB, and MongoDB is still growing very fast at let's call it 30%, right, close to 30% growth, and the growth is not abating for a company like MongoDB. Now, a stock that I've never covered on the channel, but that reported great earnings today is a stock called Samsara, ticker symbol IOT. This is actually my first time looking at this company. The company is maybe a little more expensive than the average stock in my spreadsheet, but they nonetheless reported great earnings. This is a company that's projected to grow at 38%. Again, it has that typical SaaS margin in the 70%, 72% in the case of Samsara. And Samsara is a company that's interesting in that they develop tracking of fleets. At least that's what they started by tracking fleets. And so they developed specific software to track fleets in, say, construction and transportation. And they seem to be expanding to different industries, including government. And this is an IoT cloud operation system, which allows you to track the different bits and pieces of your corporation. And in that sense, it's very similar to a Palantir Foundry. In the way I look at IoT, is very similar to a Palantir Foundry, where you can track everything that's gone into the business. Not only can you track the vehicles, but you can also track your facilities, how different pieces of the software are doing. And this company is well named Internet of Things, right? IoT. And I think this is a very interesting company because it fits into that narrative of businesses becoming data-driven as opposed to businesses being human-driven. We still live in a world where most businesses are human-driven. Human make the decisions, and when you incorporate real-time data of your assets within the firm, you can enable firms in the future to be mostly data-driven as opposed to being human-driven. And this is part of this big trend of whether it is Snowflake, whether it is Palantir, or whether it is IoT, which is a new company for me. And their product on the surface looks like it has some overlap with Palantir. So I'd be interested in looking a little more into a company like IoT, knowing that they clearly start talking about the data app, quote unquote, the app that runs your company based on the data that it receives, which is the grand vision of a lot of these firms that run businesses, a lot of these operating systems for firms. Their grand vision is that the firm will operate itself with very little human labor, because it is just going to be the computer that runs the firm, and the human labor in it will be very, very tiny. So part of this mega trend, company growing at 38%. So this is a company that will be growing much faster than, say, a Palantir. So I'm interested in Samsara, and I will be looking more into it. Then we have SentinelOne that reported earnings today. They reported fine earnings, but their guidance on SentinelOne was not that good. And, whenever I cover CrowdStrike, SentinelOne always comes up in the comments section. What do you think about SentinelOne? I've covered SentinelOne on the channel in the early days, one of my full videos on SentinelOne. SentinelOne is the smaller cousin of CrowdStrike. It's the smaller company. It is the challenger. It is not the leader in the space of endpoint security. They are the challenger, and as a result of that, in the way I rate stock, they are twice as cheap. You're buying each percentage point of growth at SentinelOne. You're paying twice as little as you are paying for CrowdStrike. But that's probably not enough to get me to buy SentinelOne, because CrowdStrike gave us a long-term, 3-year out guidance, annual recurring revenue guidance that's 3 years out. That's what we get from CrowdStrike. And from SentinelOne, what we've been getting for the past 2 weeks is rumors that this company might actually get acquired. And that's why the stock has been running recently, and the stock has been going up recently, because a lot of investors are getting excited that SentinelOne may be acquired. And some of the reason for that is there's many managers that left SentinelOne to go work at other companies, including CrowdStrike. So will SentinelOne get acquired? Well, for many traditional investors, that's a great thing, because, you can make a premium, you get a quick 30% premium, but then you have no stock. Then you're out of your stock, and that's not my style of investing. I just look at whether a stock's going to get acquired as a potential red flag. I don't want my stock to get acquired. Then that means that the return that I've identified for that stock will be done by someone else. And so I really don't like acquisitions. I don't even know if a rumor is true. You need to be very careful with rumors that may be not true. But nonetheless, their guidance was not that great for SentinelOne, which is why I still prefer CrowdStrike, even though CrowdStrike is twice as expensive as SentinelOne. It's noteworthy to note that at a 0.44 on this spreadsheet, CrowdStrike is actually not that expensive either. It is one of the cheaper SaaS stocks out there. Believe it or not, because traditional finance looks at CrowdStrike and tells me CrowdStrike is very expensive. I don't think so. I don't think so for the growth that it has. I don't think it's very expensive. And the last one is Lululemon. So Lululemon, if you've seen my lifestyle stocks videos that I've made about figs is the main example of what I've done on lifestyle stocks. Figs is trying to do scrubs and make scrubs popular for everyday use. Lululemon succeeded a while back now what Figs is trying to do, right? The yoga pants. They made yoga pants a status symbol. They got yoga pants out of the yoga studio into everyday wear. And as a result of that, they created a tremendous amount of value, just like when Levi's introduced jeans to the marketplace, right? Created an enormous amount of value. But to me, they're still riding on that yoga pant trend. And as a result of that, that means the growth is at 18%. Now, for most investors, 18% would be a very good growth numbers, but not for my style of investing. On this channel, I focus on hyper growth. I want 30%, and I have good reasons to want 30%. 18% is too close to monetary inflation. Beat the denominator is the name of my channel. I'm trying to beat monetary printing. At 18%, you're only 3 to 4% more than what I estimate to be the new money supply issued each year. So that just doesn't do it for me. But to me, this stock is not growing fast enough. And the question is, even though they had good earnings today and good numbers, the question is, can they find the next big thing, the next big trend that will lead to more growth? You know, what could it be? Could it be expanding in China? There's a lot of talk about Lululemon going to China. Could it be that? Could China be a major market for Lululemon? I believe so, but will it beat that growth? Will it take the growth up past 30% each year? I don't know. Could they make a successful clothing line for men? They've tried many times and they've not succeeded at that many times. Could they do shoes? They've tried shoes and they've not done too well with the shoes from what I'm reading about Lululemon. So what is going to be that next product for Lululemon beyond the yoga pants that's going to reignite growth? That's what it would take for me to get interested. And when I look at the way I value stocks, this stock is actually expensive because it doesn't have that hyper growth. If this stock had, 40% growth, that would actually look very attractive right now. But the projected growth is not that good for Lululemon. So all in all, the earnings this evening were really great, especially in IT, especially for MongoDB and IoT, and SentinelOne was okay, and Lululemon was good, but not good enough for me, and CrowdStrike was great earnings yesterday. The market is back up. It's been back up the past 2 weeks, so we'll see what's going to happen. We'll see what's going to happen and where we're headed. Today, the PCE came in line with estimates, although some nitpicked and say it's actually not in line, but it's mostly in line with estimates. And so the market reacted rather flat today, not too positive, not too negative. Let's see how the market does tomorrow. But as far as the earnings and what those earnings mean for the market, I personally see no red flags. I see green flags with those earnings. Anyways, this was not investment advice. This was just entertainment. Hoping you were entertained. Appreciate your likes. Appreciate you subscribing to my channel. And if you can follow me on X, I also appreciate it. Thank you and have a wonderful day.